I'm Larry Gamboa of Think Rich Pinoy, and with me is no other than Rex Mendoza. Some of you may not know Rex, but he's a corporate man, both on the Ayala side, heading the Ayala Land Corporation, and then also Philam Life. But now, interestingly, Rex has become an entrepreneur in his own right, using the experience from corporate to develop a company called Rampver. And in Rampver, and as he's developing and growing Rampver, Rex is involved in real estate. So Rex, how do you connect all of these diverse backgrounds and now Rampver and then real estate?
Well, it was quite a journey for me. I started in financial services. So when I was a lot younger, I often referred to real estate as a luxury, not an investment. So almost all of my investments were all marketable securities. Only until I got married that I got into real estate because we bought our first house. Because my wife required it. So basically, no real estate investment at all. And basically, as I've said, it's a luxury because the house never gave me money back, so it's not an investment. You know, when I got into Ayala Land and headed up its sales and marketing team, corporate sales and marketing team, I realized the mistake I was doing because real estate by itself is really an investment depending now on how you utilize the asset. You can make assets a luxury and assets as an investment, depends on what you do with it. So I started accumulating, and these are both residential lots and condominium units. Now, I used leverage, and that's the reason why my real estate assets compete with my marketable securities yields, because through leverage, I hike up my yield both on the rental yield side and on the capital appreciation side, because the cash out is not totally done in cash. It's a down payment and a creative scheme that makes me own the unit over time.
So for example, you're talking, let's say 10 million property, and you only put in $1 million down, and then within time that million becomes 2 million, you already have 100% return on your 1 million investment.
At times it's over that. And again, I say this because obviously there are reputable developers, good brands where these things happen. Like to cite an example, I think everyone knows New Valley. I bought a lot in Santiago, for example, at a good payment scheme that required me to cough out even less than $1 million.
Wow.
Right?
Okay.
And at that time, it was maybe about 15,000 per square meter.
Okay.
So, in a little while, it can now fetch about 23 to 24,000 per square. So people will say, "Oh, you made like 8 to 9,000 per square meter by spending 15." No, I did not spend 15, right? I financed it and probably just paid less than 2,000 per square. So the 2,000 actually became 8 to 9. So that's more than enough in terms of multiple, right?
Yes.
That can now be comparable to a stock or to a bond, depending on how you get to use it. A condo is another situation where you not only deal with capital appreciation, you also rent it out. So there is cash flow and there is passive income.
Wow. So you're making money both on the appreciation of the condo unit and the income from the rental.
Exactly.
And you did it all leverage because you didn't have to put out big money on your part.
Yeah. And it doesn't mean that, you know, a person doesn't have the money for the property. Leverage is a matter of expanding the base at which you can come up with an investment. So, like let's say if I have cash for one lot or a cash, enough cash for one condo unit, I can actually use that same amount of cash to buy 5 or 6 units using leverage.
can you illustrate this? I mean, so that the numbers can click in people's minds.
For example, the condo units of Avida, right? The one bedrooms go for about 2 million, 2.5 when I bought them, right? I could have bought one, let's say, at 2.5. But if I bought three, I would have not cut out the cash, but used three leverage positions where I could have put not 2.5 but even less, like 500,000 each, right? And pay monthly for all the three units. So I just unleashed 1.5 and the remainder would be the monthly amortization that I will have on the three. By the time they get turned over, I turn around and give it way back. That practically finances the 80 or 70%, right? I now use the rentals to pay for the amortization.
All right.
So my position is more like I own it, but I'm not paying for it.
Interesting. Very interesting.
So it's there are creative ways of doing this, and as we do margin trading, as we do several different schemes in marketable securities, you can also do it in real estate.
What tip or what insight, based on your experience, would you now want to share with people who are just starting out? I mean, you had a corporate background, you understand all this financial, but there are people out there, maybe OFWs, they're just earning certain income, but now they want to move it to real estate. How would you advise them at this stage of their profession?
Well, I always say they should study, they should learn, first of all. It doesn't come easy. A lot of people sometimes, oh, he earned that much money, so I can do it myself. No, it's not as simple as that. Everything, the wealth begins in the mind before it goes to the pockets, right? So you have to study, you have to understand. You have to talk to people who have that. So I guess number one is to get the background information, be comfortable, don't put in money that, you're probably gonna be so uneasy or uncomfortable with because you don't understand what's happening. So learn it and talk to people who have been successful. And the next thing is really to execute.
Okay.
And not to execute in a big way. Maybe you can start with, very, very small units, and then you can deal with 2 or 3, and then as you build up your base, you can go for higher priced, houses and lots, and, fixer-uppers, things like that. There's so many ways of getting yields in real estate. So people will have to understand and really decide where they're comfortable at. Do they want it? Again, for me, it boils down to objectives. You want passive income out of this? Do you want capital appreciation? Because there are properties that can give you great rental yields, but the capital appreciation might not be that much. So if you're looking at capital appreciation, you have to look at properties that give more of that rather than rental income. So in the end, it's objective based. It's structured for risk appetite, and then most importantly, you learn as you go, because you don't get it in day one. I mean, I already worked for a real estate company. As I've said, I headed marketing and sales, but I learned to become an investor on the other side, because selling is very different from maintaining.
So it's amazing, Rex. I mean, given where you came from and where you are, if I have, let's say, ₱1 million, I'm an OFW, would you point me to real estate, or would you point me to the stock market as an investment vehicle of choice to begin with?
If you have $1 million, you can do all three. I'm not saying two. Stocks, real estate, and mutual funds. You can do all three with $1 million, because you don't have to cup it up and just deal with one. There is a way of being diversified, right? And then that's the reason why you have this opportunity, because unlike in the past, during our younger years, Larry, you know this, you cannot really have a good stock portfolio if you don't have $1 million, right? No one will talk to you. But now, because of all of these online facilities, all of these platforms, for as low as 5, 10, 20,000, you can do it. And then there are mutual funds, right? So you can actually start with a portfolio. I mean, I'm not looking at a singular investment for a 1 million base. A 1 million base immediately accords you a real diversified portfolio. And I'd like our OFW friends to do that so that, they're not exactly exposed negatively just to one issue or to one particular investment.
Wow. So, 3 areas now to consider, Rex. And I guess the thing to explore now as we move forward is get in touch with you through the Truly Rich Club of Bo, because you're always available there. And maybe they can email you. Would you be open to people emailing you with some questions?
Of course.
And at a certain point in time, maybe connect with you and get more coaching advice. You hear
It'll
that?
be my pleasure.
Mr. Mendoza is very open to connecting with him through the Truly Rich Club of Bo Sanchez, and through the Truly Rich Club, connecting through email and mailing, real estate investing, what's the second one? Stocks
And mutual funds.
and mutual funds. All 3 options available simultaneously.
And if they need additional advice, even insurance.
Oh, even okay.
I shouldn't forget that.
Yes,
That's that's a big part of my background in my life.
So
it has
he's
to be
now
there.
an entrepreneur, and the company is called Rampver. How many